Hello and welcome to 2025. We have made it. This is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors, and you're listening to Markets with Megan. This year, we're going to take a little bit of a different spin on how we deliver information to you. First of all, we're going to continue to look at the economic data that comes out on a regular basis, but we're going to dive in a little bit deeper to what that only means to the market reaction that day, but what does it mean for the future? What does it mean for our outlook on different investment classes? What does that mean for asset allocation? And specifically, what does that mean for the economy, the Federal Reserve? These are things that we want to delve a little bit deeper into this year. We also welcome questions or comments. Wherever you get your podcast, there typically is a comment section, but you can also send questions or comments through to podcast@verdence.com. So let's kick it off today. It is Tuesday, January 7th, and we got some information this morning from the ISM Services Index. And what this index is it's an index that measures the activity in the service sector. What is the service sector? This is where Americans spend the majority of their money. Now, we've talked about how the consumer makes up the majority of U.S. GDP, and within that spending, the majority of where we spend it is in services. So think about getting your hair cut, getting your lawn mowed, the streaming services, your cell phones. All of these things are service-related items that continue to put pressure on inflation. It's what is considered sticky inflation because these are things that people really can't do without. Now, in this ISM Services report today, let's go into the details here. The index did rise. It's now continues to be in expansion territory. So services are still firing on all cylinders. Within that report, some of the components of that, just broad business activity rose at a solid pace. We also saw increases in deliveries as well as the inventory changes. But where the frightening part of this was the big jump we saw in prices paid. So this is the prices that you're paying for your services. This jumped to the highest level since 2023, and it continues to trend higher. This is something the Fed's going to be concerned about. So what had happened today in the markets? What happened today is we saw interest rates rise. Why did they rise? They rose because now the expectation for Fed rate cuts is basically completely off the table for the month of January. There was a chance it would be, but now after this report, definitely off the table for now. We saw equity markets take a bit of a hit, but specifically information technology, consumer discretionary, communication services, these parts of the market that have rallied so much as consumers had continued to spend, as inflation was coming down, and as the Fed was cutting interest rates. That's not happening anymore. We're showing inflation pressures maybe picking back up again. The Fed isn't going to be able to cut interest rates, so this is going to put pressure on the consumer in the first half of 2025. Now, the one thing we also say about economic reports, they tend to be market moving. We don't take 1 month as a trend. We do want to see consistent months where this has been elevated. And we have seen this in the ISM services. So it's definitely something the Fed's going to take a look at. Now, going forward, we think that this is going to be a theme throughout 2025. This inflation story is going to be, back and forth. Typically, inflation comes and goes in waves. We saw that in the 70s and 80s. It's never a perfect decline down and then stays low. We tend to see that it can be reignited, and we're getting some signs that that's happening right now. This is going to continue to create a volatile environment for equities throughout this year. Bonds are typically going to be weaker on this type of information because inflation does lead to higher bond rates. But the valuations in the market, it's going to hit those areas of the market that have the highest valuations. And as we said, it's been technology today. It's been communication services. These are areas that are expensive right now. And these are the ones that are taking that valuation hit. That's all we have today, but it is a very busy holiday shortened week. We will see that we'll get the employment report on Friday. That's going to be the most important report that we'll get. We'll also get some more information tomorrow on job cuts as well as the ADP employment change and initial jobless claims. So we'll be back some more this week to give you some more insights into what we see from this economic data and what it means for the kickoff to 2025. Thank you again. If you like this podcast, please subscribe, hit that alarm bell. And if you want to see the history of our podcasts, you can go to marketswithmegan.fm. Thank you.